It is true, as of a few days ago, stocks are officially overbought. And you might be wondering, what does that mean for the market? Well, we're going to look at some cool historical data, and I'm going to show you some of the biggest buying that we've seen literally since the post-pandemic. So I'm over at mapsignals.com looking at our latest insights piece. Let's go ahead and get into the data. So overbought, right? We've got the big money index, right? This is that yellow line. This is basically following the flow of money as it goes in and out of stocks. Now, look, we were oversold in October. Tends to be a great time to get long stocks. Right now, we are in overbought territory. That's above this 80%. And as a reminder, last time we got overbought was in the middle of August. And obviously, we had a big, steep decline. Not expecting that this go round. But why are we overbought? Well, we're starting to see some of the biggest buying literally since the post-pandemic. So what this chart is showing you are the daily counts of stocks that are getting bought and sold. So that means how many stocks are going up with big volumes, prices are increasing, right? That's indicative of someone getting involved in the shares, probably institutions. So there was over 400 stocks that got bought in early February, right? Very rare event. The same thing we saw with ETFs, okay? So who buys ETFs? Well, it could be a lot of mom and pop, could also be, some of these wealth advisors, right? But typically when you get uber bullish on ETFs, right, we tend to be near the near-term peak. And so here's the last time we had big ETF buying. You can see that the market did pull back. And here we are, we've got a lot more buying recently. And that just suggests that markets are at this exuberance area and they should pull back near term. So let's go ahead and look at a cool study. So what happens when you have extreme stock and ETF buying? Like what happens with the market? So let's check out this study. Very, very cool. Now, listen, I went back and I said, okay, so we had 400 plus stocks that got bought. This is on February 2nd, 456. That's roughly 30% of the institutional universe that we track. So I wanted to go back in history. Let's go back to 2009. Show me all days where we had at least 300 stocks get bought in a day. What did the market do going forward? Well, here's the S&P. 1 week later, down 0.5%. 1 month later, it's up 0.4%. 3 months later, though, that's the real key. It's up almost 6%, double digits 6 months later, and then a healthy clip a year later. So what's the bottom line? Bottom line is expect a little bit of a pullback near term. But as we get out a couple of months, that trend continues to go up. So as money is flowing into stocks, it is not a bear signal. Now, let's look at ETFs, right? Remember I told you early February, we had a couple of days where over 100 ETFs got bought. Went back in history since 2010. And there have only been a few dozen times where this has actually happened. And check this out. A week later, after extreme buying, the S&P is down almost 0.2%. 1 month later, it's down 0.2%. But something starts to happen when you get 6 months out. You get some really solid performance going forward. And that's the message here. So even though markets are overbought, typically we get a little bit of a near-term pullback. And I think that's a great time to go shopping for great stocks. Remember, if you like this unique data, make sure to subscribe to our YouTube channel. Check out mapsignals.com. Follow our Big Money Insights. Just trying to make you guys a better investor. I'll see you next time.